Hello, everyone. I'm Haydn Zeis, your host, and I want to welcome you to the Raising Returns Real Estate Podcast, where each of our guests provide you with valuable knowledge from their unique take on real estate. We're here to teach you how to raise your returns. Our guest today, Shawn Parker, is incredibly knowledgeable about the real estate market. He's my friend and mentor, and he's been investing in real estate for over 30 years. And he has managed over $50 million of real estate during his career. Shawn's the co-founder of Parker Realty Associates, co-founder of New Prospective Asset Management, and co-founder of Lonicera Investments. Shawn, thank you so much for being here.
Hey, great to be with you, Hayden. Interesting times, so we're going to have a real fun conversation, I bet, today. You have all the questions. I hope I have some things to add to it.
I definitely don't have all the questions for the times that we're in, but, we're all taking it day by day to try to figure things out. And who else better to have on the show? You survived the Great Recession, and you actually thrived. So can you tell us a little bit about your background, and then let's jump into how you thrived during the recession.
Okay. I'm going to bring in a multitude of perspective on this thing. One is I'm the child of parents who lived through the Great Depression. My parents were high school class of 1940, so they grew up as teenagers through what was really the worst time in American history economically. Then so I had that value base to pull off of. It's actually why I went into real estate, is the things that they taught me, and I understood through that real estate was the one thing that hedged against all these problems. I graduated undergrad at Ohio State in 1987 in the middle of a recession where people were struggling to find jobs. Fortunately, I had multiple job offers because I worked my way through school, and I had internships at name brand companies that made me very attractive to the marketplace. Started buying real estate 1988, and that's kind of a strange way that I got into it, but I never left, and I recognized the value of what it was. Lived through the dot-com bubble of 2000, where effectively Wall Street put the biggest gamble down. We thought the biggest gamble of all time. There was one coming a little later. We call that the recession of 2009. And in 2009, I was appointed a court receiver. So I was charged by the common pleas courts all over the state of Ohio with managing the problems that occurred because of the economic downturn. So I had an insider's look, both operationally and forensically, as what happened and how it happened in real time. And I also had the luxury of reflecting back on what occurred. So, unfortunately, I guess I have earned the stripes of the knowledge base of knowing how these things happen, why they happen. What we're in right now is effectively it's a somewhat different animal, but it's all sitting on top of the economic system that we have created in the United States, and it is a system of leveraging, over-leveraging, and the stock market is the best betting casino in the world. And unfortunately, I think a lot of people right now are sobbing because of the fact that they fell back into that trap. So that's a little bit about my background. If I need to put a little bit more on that, let me know.
I think that's great. I think letting our listeners understand that you do have those stripes of having earned those stripes during the Great Recession, and you've got that knowledge base. I mean, it's a testament to see that the government appointed you as a receiver for the court system because they obviously saw the knowledge that you had. And when we're going into economic times like that, you've got to have knowledgeable people on your side. So I think the biggest thing that I'm seeing right now is, we're not in a recession technically right now, but we're probably headed there. And I want to look at the opportunities that we're going to have and not necessarily focus on the negative. And one of the things that is different about this recession than previous economic downturns is we know exactly why this recession's happening. It's because of COVID-19. Previous recessions kind of it's a lag before you understand what exactly is happening. So I'd love to hear you kind of talk on that subject and kind of what you think might be opportunities in an unprecedented time like we're in right now.
Okay, makes sense. Yeah, let's define this situation a little differently. And I want to use the word situation, different than an economic event, because this came about because of a medical situation that penetrated our economy. We have an economy that is globalized, and it is globalized in a very bad way. When you look at geopolitical theorists out there, these are highly educated people, and they talk about the interdependence that we've created over the 8 years of Obama, over the 8 years of Bush, and over the 8 years of Clinton. So we have 24 years in our history of offshoring our production, 24 years of making everything incredibly cheaply in Asia. I was going to say the Orient, but they really don't use that term anymore. So what's happened is the United States has become a service sector economy, and we don't produce a whole lot of things here. Service sectors are not able to create true value in a sense, with the exception of what we do when we actually craft and create. So we effectively eroded away our base overseas. And what we didn't know through the course of this situation, as I'm calling it, is that we had eroded away some of our key infrastructure. And you're going to see a big return of key infrastructure. So that's that's a thought that I want to hold up in the air for people to think about, is as manufacturing returns to the United States, and it will, what does that mean? So our first golden opportunity is manufacturing. The government has to do it. There's no question about it. We are going to be creating a lot of warehouse space. A lot of warehouse space that we have existing is going to be converted to manufacturing facilities, so we can start making ibuprofen here again. We can start making acetaminophen. We can make gloves, masks, and gowns here in the United States. But also we have to make a lot of other things that are strategic to our ability to resist global problems like this. But here's what probably won't happen. We probably won't see the jobs return in the proportion that we expect, because robotics and automated manufacturing processes are going to be much more inherent in the way that this comes about. So it's going to be much more efficient and cheaper for this manufacturing to return. So we have the upside, but we on the real estate play, but we won't see as much of an upside as many people will think on the human side of this thing. But the good news is we have an infrastructure that will come into play, and the United States will rebuild the infrastructure. So where the jobs are going to occur is in the service sectors: electricians, concrete workers, iron workers, plumbers, pipe fitters. I think we'll see a resurgence in the unions to a degree, because these people are very well governed inside of a union relationship. But we're going to see the unions become more modernized in the way that they step forward. And hopefully that is a win-win for everybody, the way that occurs. Now, moving over into the economic situation. So I'm skipping from the box of where that opportunity is to the economic situation. The economic situation is that we had a stock market that was at an all-time high. The stock market, interestingly, is where people have lost most of their money, and that's what I said. People are holding their heads and sobbing and saying, "Gosh, woe is me." Well, okay, if you go to the racetrack and you place a bet on the number 4 horse, and the number 4 horse doesn't come in, you get nothing. And here's the challenge with the stock market: it is and always has been governed by the people at the very, very top. The last person paid is the stockholder. And if you have common stock, you have nothing but you've given them your money, and they're supposed to pay you back something. So you're the last guy paid at the end of the day. And that's what Americans, oftentimes fail to understand. The difference with real estate is you're the first guy paid, because you take the rent and then you distribute it out to your mortgage holder, the tax man, the maintenance man, all the different people that you have to pay. So that is the inherent difference in real estate versus the stock market. So we have this oversold stock market to the tune of 29,000. Today it's 19,000. But if you look at your portfolios, the honest man's portfolio is probably looking even worse than that because he's bet on a lot of stocks that have been hit. If you've got oil stocks, which your broker probably has you diversified in because they use the clever term diversification. And if you are diversified with oil stocks, you're probably doing even worse. So the next phase of that is, why did this happen? It happened because your money was sitting on the table, and there was so much of it that the opportunists are looking and saying, okay, it's my turn to line my pockets. And who wins when you control the table? If you go to Vegas, the casino always wins. When you're at the stock market, the people that run the stock market, in my opinion, are always going to do very well first, and then hopefully you get some part of what's left over. So that's what I believe is happening in the stock market. As for real estate, right now we are not seeing declines in real estate values. We are a month into the real estate game, and we're measuring values on a daily basis, looking at various markets. We think that there will be rent interruptions with a lot of commercial property in particular, but in general, what we're going to do is kind of like playing hopscotch. We're going to hopscotch over a couple squares that represent months, and then we land on our feet and we move forward from there. So this is just a question of timing, and we will get through this.
One of the things that I'm finding really interesting right now is this is nationally. We have mandates that are asking, landlords not to evict. You're having banks who are being asked to give 90 days of to defer payments for 90 days. And these are all great things that we haven't necessarily seen before. So it seems like right now you've got the government taking a look at real estate and saying, okay, there's a chain. You've got the tenant who has the job. You've got the landlord who provides the place to stay. Then you have the bank that finances the landlord. And then the banks are maybe holding the burden a little bit more than the others because they're bigger and stronger financially. So it's an interesting take. And although you may have rental interruptions, I've seen a lot of people who are saying, okay, well, we'll give you 90 days for rent, but in turn, we want you to be staying in this place for 90 extra days. So seeing that, it is encouraging because although you'll have a pause in cash flow in certain instances, the government has been very clear with people that this is only for people who have been affected directly by a job loss from COVID-19. And so I really am liking what I'm seeing so far. Although you never want to see a cash flow interruption, the way the government's going about it, you're not seeing those drops in property like you would if the burden was being given to the landlord.
Yeah. I think along with that, the way I see this, the metaphor that I like to use is a game of hopscotch. And what you do is you just simply hop over two squares. Those squares are the months that you have in front of you. And you move forward and we say, okay, great, we're just going to restart everything July 1st, for example. But there's also the question of reality. And the reality is that we still have the month sitting in there of April, the month of May. And what happens in those months? Because people still have to eat, right? We have the moral responsibility to take care of people, of families through all this. And frankly, I think our government has done exactly what I wish they had done in the last crisis of 2010. And they came straight to Main Street and they said, here you go. Here's the jobs package. If you lose your income, if you are a small business person, we are going to give you money, and money is going to be forgivable. And this is the way the government moves us forward in time across those two squares. So effectively, the cash flow scenario will continue forward, and we don't do what we did in the last market with quantitative easing and TARP. We do not give the money directly to the Wall Street bankers and then hope that it trickles down. Trickle-down economics was a theory back in the late 1970s that some people had put forward, and they said, well, you give to the wealthy people, and believe me, I am a very conservative person as a rule, but the theory was you give it to the wealthy people and they will create the jobs for the other people. In this situation, the attack financially is actually hitting people who are working class people who run our business, run our society, run every sector of what's happening out there. These are the people that need protected, and I believe that the government has done a masterful job of recognizing where the solution needs to be placed. So what that means then is that rents with rent forbearance, okay, we move into a question, and there's a word that has not emerged in any paper that I read yet that was the big word back in the last crisis. The word is moral hazard. Moral hazard is the concept that you take the risk when you engage in a relationship, and whose responsibility is it for the risk? In this case, the banks are taking a look, and the banks are not proactively saying, here, we want to give you forbearance, but they want you to come and ask for it if you need it. And if you have a good banker, your banker should be very open to the conversation, to helping you skip those two hopscotch squares to the future, so the banker can then begin collecting his profits again in the future. That actually should work in theory. There's only one challenge, and that's if you get a bad banker. Or if you have a person asking for help. There's two scenarios actually, or a person asking for help who does not need help. We've heard of some restaurant chains out there saying, "Hey, we're not going to pay for the next 3 months." Well, the problem is they asked for this. It's called forbearance. They asked for it actually back around March 10th. Well, no one knew that there was a real problem at that point. So it needs to be need-based. People need to be honest about whether they have the actual need. And the banker then needs to take a look, or the lender, and say, honestly, this person does have a need. So let's take care of everybody so we can then get the economy to a restart. And, if that's in 2 months, we hopscotch square 2 months forward. Maybe it's 3 months. We don't know yet. And then we restart at that point. The good news is history does show that this works. And I'll tell you, the best example that I can come up with is actually the Marshall Plan of Europe. If you look at the fact that in World War II, we carpet bombed Germany and most of Europe, and then in a matter of 10 years, we went from not even having buildings to having a robust economy back working completely. We're not going to carpet bomb our buildings. We're not going to kill every cow, pig, and sheep that's in the field. Our livestock business is still going to go forward. So it should simply be a question of everyone staying at home, sheltering in place like the government's asking us to do for a short period of time. And then we move forward. We turn the light switch back on, and everybody goes back to business somewhat as usual. There will be some reverberations that will need to happen out there. But the opportunity that's going to open up when that light turns on and everybody takes a look, and people are already seeing this, they're going to say, okay, it's time to start making our pharmaceuticals back in the U.S. It's time to start making medical supplies, medical equipment back in the U.S. But, oh, yes, what else can we make here? Because that means that now we have a plastics industry that's reinvigorated, an oil industry that feeds the plastics industry. Everything will turn back on in an even bigger and better way. So, frankly, the United States is poised to have the better, higher level of employment than we've possibly seen ever. I mean, we were basically at zero unemployment, and then we layer that over with infrastructure rebuilding. We need to readapt society so we have people trained to fill all those job needs that are coming out there. It's really an exciting time in the future. We just have to get through these dark couple of months that we're struggling with right now.
Well, one of the things that you touched on was the silver lining to all of this is this, although we're more separated than ever with the social distancing, it's bringing people together in a very patriotic way. And I'm seeing more American flags out. My neighbor is playing America the Beautiful every night at 6. And these are things that you see historically during wartime. To a certain degree, we are at war with this virus, but I absolutely love the fact that people are coming together, and it seems like the government really understands how this is affecting, like you said, small business and the working class person the most. And we all know that small business is the backbone of the economy. And if we don't protect the backbone, we're not going to be able to get up and walk. But I don't think that's going to be the case.
Yeah, America. Here's the beautiful part about America is that last night my wife's outside with my son, and they're putting candles out on the front walkway, and we're lighting candles for all of our medical workers. And this is the beauty of what our country is about: is we stand behind one another in times of need and in times of trouble. But there's more to this. We actually stand behind each other, even when we have the backbiting that's going on. And we've watched what we think is a fairly dysfunctional government the past year and a half or so. But at the end of the day, Americans, as a rule, the people of America want a better place to raise their families, a better place to go to work, a better place to live the American dream. And I always say we are the country that everyone is trying to get into. People don't try to leave America. They say they want to leave America if so-and-so gets elected, but they don't leave. Why don't they leave? Because this is the land of opportunity. We are the light on the hill for the rest of the world. And the rest of the world every day looks and says, what is America doing in any time of crisis, any time of social disruption, any time of economic disruption, any time of political disruption? They look at us. And the tough part of that is we have to live up to the role. And I think that we have done an amazing job. We came out of a very heated, ugly impeachment process, and we moved right into fixing a pandemic that just showed up on our doorstep. And we have mobilized surgical hospitals. We have taken care of the food chain. Toilet paper chain might be a little different story, but that should be taken care of, I think, here in about another 10 days, because people cannot. I don't think people are going to continue buying toilet paper.
I think there's not enough warehouses for there's not enough warehouses for all the toilet paper that's been
right. Exactly. But at the end of the day, so how do we come out of this better? We come out of this better because we are not an energy-dependent country anymore. Gas prices out there today are, when I was driving in, I saw $1.48. Oil prices are, there was an article today in one of the publications that oil prices may go negative because they can't store all the oil they're making. That is a 100% shot at the American energy market, because when America became energy independent, it means we no longer have to play on the global stage at all. There's nothing that they offer to us. But here's what we offer them. We offer them financial stability. Our Navy keeps every trade route open in the world. The Suez Canal, the Panama Canal, the Chinese Sea. Every part of the world is kept open for free trade by the United States Navy. So we are the light of the world. And as Europe struggles with a lot of questions they have coming up, I think European markets are going to be very challenged because they're going to put the walls back up. There's people talking about the euro possibly diminishing in its exchange ability, not necessarily its value. I'm not going to go into that conversation, but its exchangeability, because the countries are going to look and say Austrians are Austrians, Germans are Germans, French are French, and we're going to see a whole different attitude towards immigration, towards people moving across borders. So that'll all be interesting. But in America, we don't have that problem. We got rid of those issues when we had a revolution, and we put a constitution together. That constitution is the way that we interact with one another here. So yeah, the United States, we're going to be fine. We're going to do better than the rest of the world as we come out of this. And frankly, I believe that real estate continues properly leveraged, okay? And that's one thing that, one challenge is people are over-leveraged in real estate. But a conservatively leveraged piece of real estate means that a person can ride through dark times like this with great assurances, and their future is stable and predictable. And that's the best we can do in terms of providing opportunity to ourselves and then being the big brother to the rest of the world.
Well, I think that's really well said, and having the patriotism, like we were saying, that's coming back and shining through the clouds is something that's quite amazing, and it's very unique to the American culture as we work very hard to stay on our feet. And now I want to touch a little bit back on real estate and not going untouched. If it's properly leverage. Now, I have had several people ask, hey, where are the deals? Are you seeing anything out there? And real estate typically lags behind an economic situation, like you're calling it, in most cases. Now, for this particular case, because we have so much government intervention from a standpoint of not allowing foreclosures and not allowing evictions, I completely agree with you. I don't see that there are going to be a lot of deals that like there was in the Great Recession of 2008. So from that standpoint, where would you tell people who are looking for deals to look when they're scouring this market?
It's interesting because there's a lot of cognitive dissonance in the marketplace right now, and that's the fancy word for confusion. And I've talked with a lot of investors that are calling me up and saying, well, what about residential? Are people not going to pay the rent? What about, where's the buying opportunity? Should I be looking to sell? And I point to a simple compass on this thing, and it's in the Wall Street Journal every day. It's the money supply, the M1, the M2, the M3. We just printed $1 trillion of relief for the American economy. Some people, maybe 2.5 trillion actually. There's a potential that if we need more, we will print more. So money cannot be destroyed in theory, just like matter, going into physics class, high school physics class. But you can make more of it, and that's the interesting thing. But what can you not make more of? Simple things: gold, silver, real estate. Okay, there's only so much of it. So I believe that we do have, sitting on our horizon, a very large run-up poised for real estate values. So a house or a commercial building that costs $500,000 this week, I think in 2 to 3 years that is going to look like $750,000 if nothing else changes in the marketplace. That is because we have put more money into circulation. So when the demand goes up to obtain that asset is naturally going to go up in value. People who are invested in real estate right now are going to do very, very well. The things that people have to look out for, however, are where markets are declining in population, because that will decrease some demand elements for real estate. And you need to also overlay that with the future of where this money is going to seek its returns. And this is where the manufacturing and the infrastructure development comes into play. So I'm calling that we are going to see service industry locations, which is flex space. We're going to see small office continue to do well. I think that the big boxes are going to continue to decline. We've already seen that in virtually every market. That's no secret. But online purchasing clearly is going to go up dramatically. So logistics companies, logistics warehouses, anything that has to do with transportation is going to have a continued, not a new run. None of this is new. This is simply an enhanced continued run up in valuation. Real estate, the population will rebound, and we're going to see residential continue to do well. I do think we're a little overbuilt possibly right now, or we're getting very close to saturation on A property, A residential, and even some B residential. But people are going to take a new look again at what I call C and D, which is it's government subsidized housing. People that want secure bond-like performance will invest in people who the government is responsible for paying their rent check on a regular basis. So what's the aggregate answer to all that? Everything's going to go up. When we hopscotch across this, there's 2.5, maybe even more trillions of dollars of value that will seek its way into real estate. There's one other caveat to put on that as well, and it's a market that I am not invested in presently, and that is American farmland. It is the gold standard, and as we see all of this change happening, we are going to see a very hungry Asia have a even larger need to be fed. And America is one of the 5 breadbaskets of grain production in the world, crop production. So I think we're going to see American farmland become amazingly more valuable as well.
Well, I think from a standpoint of real estate, like you're saying, with more money coming into the market, the values go up. I'm really excited to see the opportunities that we may have. And, typically we end the show asking what advice you'd give the listeners to raise their returns, but I want to do something a little bit different and just ask you from the standpoint, there are a lot of people out there worried, and there's a lot of people who are seeking information that is positive. What would you say to keep our listeners motivated and just positive?
If you are, when you go to bed at night and you sit there, and that's generally when most people, the anxiety comes into their life, and they think about everything that tomorrow's supposed to be or what tomorrow's not going to be. Here's what we know. We know that America has a great healthcare system. When you look at the number of beds available, the number of intensive care beds versus the rest of the world, we have the best. When you look at our food supply, at our logistics chains, our food, our stores, I hear, hey, the groceries are hit, but I go into the groceries. I've gone into the Kroger stores here in Ohio, and there is plenty to eat. There might not be pasta on the shelf last week, but now we're seeing pasta on the shelf. So people have pantry loaded. I talked to a person yesterday. It's a 2-person household. They spend over $2,000 filling up 3 freezers. The grocery markets are going to have to deal with the fact that people are going to have to eat their way out of the stores that they put in their houses, and I hope people do not waste food. But at the end of this, we all go back to work. There are more jobs. There are good paying jobs. And the parts of our country that have been hit the hardest over the last 30 years, that's the Rust Belt. That is the small town manufacturing cities that were dependent on 3 factories. These guys have hope. There's an opportunity that's going to emerge there, which means the economies come back, the little leagues hopefully open back up, and if the real threat to America, in my opinion, is the thing that was there before. It's the drug culture, and if we would get serious about eradicating the drug problems in this country, that's the other thing that I hope that we look at next. But it's great to be an American. The economy is going to be fine. The government is making sure that your anxieties are minimized. We're just going to be great. I truly believe it. But yes, it will be frustrating to watch the reruns of Seinfeld for the next 35 days while we're all doing the social distancing that we need to do. So we have to get through that. But we will. And, we've been through darker times than this, at least as this is presenting itself today. So I'm very optimistic.
Well, Shawn, thank you so much for being here. And to all of our listeners, thank you so much for listening to the Raising Returns Real Estate Podcast. We're here each week, and make sure you subscribe and share if you found this information valuable. Thank you so much.